Volume weighted average price, or simply the Vwap, is a tool that's used by many traders across the markets to find direction and identify the strength. Usually it's best at determining who is currently having an upper hand in the markets, whether it's bulls or bears. But while all this information is easily available to pretty much every person who trades the markets, there are two extremely important and extremely dark secrets about Vwap that are known to less than 1% of the people. Shocked, right? Yes, these people are usually the FIIs, the DIIs, the smart money, etc. And these people use these dark secrets of Vwap to exploit retail traders like us every single day. If you watch this video until the end, it will bring a paradigm shift in your understanding about markets and change your perspective completely about the volume weighted average price, or simply the Vwap. Hey guys, welcome back to the channel. This is Shrish here from Trading Explained, and now without any further ado, let's begin. Before we begin, let me tell you that whatever I'm going to share in this video is a highly premium educational material that no one will give you for free. But not me. I'm not going to charge a single penny from you. So if you want more of such extra premium educational content for free, please support me by subscribing to the channel. Now, let's dive into the video. There are two dark secrets of Vwap about which we are going to talk about in this video. I'll also share 4 examples in Bank Nifty chart, as many people trade Bank Nifty and have their interest in it. These two secrets are a clear proof of manipulation and will act as an eye-opener for those who believe markets aren't rigged. I know you are very excited to hear about it, and so I won't keep you waiting. The two dark secrets of Vwap about which I am talking about are the Vwap trap and the Vwap valuation. Usually, these two things work in sync and are correlated when the actual manipulation happens. Despite being different, their fundamental job is the same: to exploit retail traders and shift their money in the pockets of the biggies. So, if you are a day trader, it's extremely important for you to watch this video. As said previously, it will bring a paradigm shift in your understanding about markets. Enough of the introduction now, let's get ahead in the video and understand how the Vwap trap and the Vwap valuation actually works. Most people use Vwap for two major reasons: either to trade Vwap breakouts or breakdowns, or to determine who is in control right now. And because everyone is using the same logics at the same time, it becomes easy for the smart money to trap these people. Most people while trading markets think from a single point of view, without even considering what the majority of the people might be thinking about right now. Like for example, if we consider this red dotted line as Vwap and black line as price, people will look at it from a very singular point of view. Like for example, when the price breaches above Vwap, all people will look at only two things: the breakout that is actually happening at that point and the volumes. They will see that the volumes were not good previously, but while the time of breaking out, the volumes are good. So it might be a good time to go long in that particular asset. But they don't think about the fact that pretty much every person who is looking at that chart is thinking the same way. Why do you think this breakout will work only for you and not for the 1,000 others who are trading the markets the same way? And until you ask questions like these to yourselves, it's very easy to get trapped in the traps set by the biggies. Like for example, the market will break out from this point, showing you that the volumes are there, and after many people have accumulated their longs in this zone, market will reverse down from that point. Now at this point, the biggies got what they wanted. They got the liquidity they needed for their positions, and they also got your money. And this phenomena of this fake up move, fake breakout, fake volumes, and then the original down move is called the Vwap trap. Now let's understand the Vwap valuation. Also, as I said previously, the Vwap trap and Vwap valuation are slightly different concepts, but their fundamental job is the same: to exploit retail traders. And why do you think the retail traders are the ones who are getting exploited every single day? Well, it's because of the common mass thinking. It's because of the mentality. It's because of that thinking process that is pretty much same in every single trader who is trading markets. That is the reason why we can get exploited so easily. Like, let's understand in this example. Let's say this red dotted line is Vwap and black line is the price. Now when the price is trading above Vwap, the basic thinking that occurs in pretty much every single retail trader's mind is that the price is strong. The bulls are in control because they are above Vwap, the price is above Vwap, and they are pretty much controlling the price right now. But you need to think as an FII, you need to think as a DII, because until and unless you think as a smart money, how on earth are you going to act like them? How are you going to copy them? So if you are a smart money, if you are a FII, if you are a DII at this point, will you buy the market at this point? Let's say if you are interested to buy this market, let's say you are an FII and you think that this particular asset is going to go up from this point. So will you buy the markets at this point? Will you be okay? Will you be comfortable as an FII to punch market orders at this point? No, right? Moreover, the kind of position sizing that you will be having, it won't be getting fulfilled at this point either. So what these FII do, they bring the markets down. Now at this point, retail traders like us get stuck thinking that this is a Vwap breakdown. We need to short markets at this point. It is coming below Vwap. It's such a good fall that bears are probably now in control. And this thinking leads to our own exploitation, because these people who wanted to buy at this point cannot buy at that point, right? That is the reason they're taking the markets down, because they want to buy at a lower price. Moreover, they need the kind of liquidity for the kind of position sizing they are having. So to punch huge quantities at lower prices, they need to manipulate markets. They need to take that price down significantly to actually take that price up. So what we do at this point? At this point, people think it is a Vwap breakdown and people start shorting at this point. Just one single down move and pretty much every trader who is using Vwap is thinking the same way. No one is thinking that this might be a trap. No one is thinking that this might be a retracement. No one is thinking that maybe, just maybe, the DIIs are interested in this particular asset, but they do not want to enter at this point. So that's why they're bringing the price down. No one is thinking about all these things. People are interested to short. So people start shorting at this point. And this is the exact liquidity the FIIs were after. So you are shorting the markets and they are buying. They are exactly doing the opposite of what you are doing at this point. They start buying the markets at Vwap breakdown because they got the liquidity they needed, and then slowly and steadily they take the day high out. And this is what is happening on everyday basis in stock market. Now this is basically very similar to Vwap trap. Although this is a Vwap valuation. Why do I call it a Vwap valuation? Because if you see, FIIs and DIIs were not interested at this particular price point, meaning they wanted that particular asset at a lower valuation. That is why they brought that price below Vwap, bringing the valuation down, thinking and making people or fooling people into thinking that this is a short, taking that liquidity out and then taking the markets to a day high. And now you must be understanding why I said in the introduction that the Vwap trap and the Vwap valuation both work in sync when the actual manipulation happens. You can see it over here, right? But you might say, hey Shirish, this is just an example that you have drawn yourself. This is just an imagination of yours. This is not happening in markets, is it? Well, don't trust me. I don't tell you to trust me, but you will trust the charts, right? Let me show you some examples in Bank Nifty chart itself. So it will be easy for you to believe on it. So this is a 5-minute chart of Bank Nifty futures on 12th of August 2022. I'll be showing you this example in a bar replay format, so you understand how it actually happens in live markets. Let's begin. So the first candle of the day begins as a green candle, thereby showing the strength in the Bank Nifty. Also, if you see, the Bank Nifty right now is in a strong bull trend. Let's see what happens next. Immediately, this buying is rejected by the bears, thereby forming a huge red candle. Let's see what happens next. Now if you see, the bearish candle is getting a follow-up, which is actually good for the bears, right? Because the rejection is strong. It means that the rejection is strong. Next candle is also a red candle, thereby indicating more weakness on Bank Nifty. Now what happens at this point, do you think? At this point, so many people get FOMO. What is FOMO? You know it, right? The fear of missing out. So many retail traders get FOMO and they start shorting the markets just because they look at the weakness, just because they saw these 3 red candles forming, etc. But the smart money knows it all. So the moment retail traders start shorting markets, what happens is market actually starts moving up. So if you see at this point, this might be the point where retail people start shorting Bank Nifty because they felt that weakness is there and Bank Nifty can actually shoot down. So even if they might be true, the timing of their entry is not right. At this point, we do not know what is going to happen. We are just analyzing this market candle by candle. Okay. So as far as what we know from the markets right now, there was weakness in the morning, but right now it is recovering. That is all it seems to it, right? And if you see at this point, the market is actually trying to breach Vwap. It is trying to go above Vwap. Let's see what happens next. Okay, so now it actually broke above Vwap and now is sustaining above Vwap. So at this point, people might think that, hey, I was wrong, that Bank Nifty was weak in the morning, and anyway the major trend is positive, right? So let me just exit out of that short position of mine and let me go long at this point, because now the market has reclaimed Vwap, it has given a Vwap breakout and whatnot. So what will people do? As soon as people start seeing that this is sustaining above Vwap, they will go long in Bank Nifty thinking that this is a Vwap breakout or a Vwap sustenance, etc. Moreover, they will look at the overall trend of Bank Nifty and Nifty, which is positive. So that will give them an additional confluence to go long, and they will go long at this point. Let's see what happens next. Oh, the breakdown. So now at this point, people are truly confused, because in the morning Bank Nifty showed weakness, then it went above Vwap, sustained above Vwap, and now it's breaking down again. This is nothing but smart money playing mind games with us. So now what do you think most people will be thinking at this particular point of time? They saw the weakness in the Bank Nifty in the morning, then they saw the Bank Nifty go above Vwap, sustain above Vwap, then they went long, cut their short at this point, and now their stop loss is getting hit again. Now they are again in loss. So now they will feel that we were right, that Bank Nifty was weak. It was just trying to trap people above Vwap. So now what will people do? People will cut their long positions at this point and create new short positions, because this was all a trap since morning and now the real move will begin. But the reality is something different. The moment we see people start shorting the markets, that is the exact moment Bank Nifty reverses from there. And see what happens. It literally makes a day high. It literally goes and makes a day high. I'm not going to stop this bar replay. I'm going to let it continue until the end of the day, so you know how these things work out. So the day is done, and you saw how the tables turned. You saw how it all worked out. Now we were experiencing this. I tried to give you a live experience of live market in the best way that was possible for me, but I hope you're understanding what I'm trying to say over here. I hope you're understanding the meaning of this video. I hope you're getting what all is being discussed in this particular example. Let's move on to next example. So this is 5 minutes chart of Bank Nifty futures 2nd of August 2022, and this particular example is very similar to one that I had discussed earlier, the imaginary example that I had showed you guys on the tab. Okay, so what is happening at this point? Right now there was no trend in Bank Nifty up until like 11 am. It was just going sideways up and down, but at 11 am it picked up the trend. Where is 11 am? It is here. So at 11 am it actually picked up the bullish trend and broke the day high. Now it is comfortably trading over the Vwap and above the day high as well. Now what do you think is going on in the minds of most of the people at this particular point of time? People are thinking buy. We just need to buy whatever pullback, retracement, anything that we get our hands on, we need to buy that thing. Okay, what market does? So at this point the market seems to be sustaining above Vwap, and it is giving the people the time to enter into longs, because this will be the point where most of the retail traders will be interested to go long, right? Because it is trading above Vwap, bulls are in control, it seems perfectly possible for another 1% up move from this point and whatnot. This will be the exact point where smart money will be shorting markets, and the people who are buying at this point are not giving any second thought to what might happen in next 30 minutes. Result? See for yourself. As I told you, this example is very similar to one that I had drawn on the tab. Here what we get is a huge down move. This is not really huge down move, but in intraday perspective, in terms of intraday, this is a good down move in like 10 minutes or so. So what happens is people who bought longs at this point got their stopped out, and then what they see is a VWAP breakdown at this point. So because they see a VWAP breakdown at this point, what they will do is they will start shorting the markets. They will start shorting the markets. They will not think about anything else, because at this point for them it is a VWAP breakdown with volume. For them it is like, okay, the bulls have lost control in 10 minutes itself, and there are like 2.5 hours remaining for the market expiry or market closure. What can the bears do at this point? They can just wreck the market, wreak havoc in the market. We just need to short the markets right now. So without any second thought, without any thinking, those people who had bought or who had went long at this point close their longs, get stopped out, and create new short positions at this point. And you got to understand that this is exactly what the smart money was after, because the moment you start shorting this particular asset, what FII will do is the exact reverse of it. You can see it in this video. Let me just speed it up a little bit so it saves a bit of our time. You can see the moment people started shorting, it actually went up. It made a new day high. Can you believe it? It is unbelievable, right? But that is why this video is being made, to discuss, to tell you about these dark secrets of FIIs, DIIs and smart money that we do not know about, that not many people know about. So you need to focus on these minute details. You need to think a little harder. You need to give a second thought before entering into a trade. Every time you enter into a trade, you need to think about what might happen in next 30 minutes. Because if you do not think about it, you will be getting trapped like this every single time. Now let's move on to third and fourth example. Again, this is 5 minutes chart of Bank Nifty futures, 12th of August 2022. What happened over here? Since morning there was nothing. It was pretty much a sideways day, just doing time pass here and there, getting rejected at Vwap a couple of times. And now think as an FII, think as a DI. If you want to go long or short the markets at this point, what will you do? Think as if you are a FII or DI. Think as if you are the operator. Think as if you are the smart money. You cannot randomly go short or long at this point in Bank Nifty, because the kind of positions you will be having, the kind of size, position size you will be having, it will completely disrupt the momentum. It will completely disrupt the price action at this point. So you cannot do that, right? So if you want to go long at this point, you will have to bring the markets down first, and then you can take it up, because that way you will find your liquidity. People will get trapped. You will get your liquidity, and then it will be easier for you to get your good average price as well as the liquidity, and then it will be easier for you to take the markets up. Similarly, if you want to take the markets down from this point, what will you do? You need to think like this every single time. Every single time a situation is put up in front of you, you need to think like you are the operator yourself. Because if you do not do that, you will be the one who is getting trapped every single time. Now let's focus on the example and see what happens next. At this point, it's just a pretty sideways market. There's nothing going on right now. No buyers, no sellers, less volume. And suddenly, what happens at this point is you get a VWAP breakout, and this VWAP breakout will grab the attention of most of the people at this point, because people are bored since morning. They haven't gotten any real trades at this point. But as you can see, there's a VWAP breakout which happens to be a consolidation breakout at the same time, and people are going to go long at this point. I can tell you that for sure. You know why? Because we need to see this breakout candle in a very slow motion zone. I'm not sure if I can do that for you, but if I can, I'll put it up. But let's go and see this breakout candle. The breakout candle actually forms as a big red candle first, and then counters that red volume, and then goes up and ends up as a big green candle. So see carefully, look carefully. I'll try to slow it down if possible. There, I hope you saw that. It turned a big red candle first, indicating people that this is a false breakout, and then it actually turned up and closed as a big green candle. And this is the reason why it will attract most of the people. This is the reason, because this is how it happened in live markets. It will attract, or it will gather attention of most of the people, because people will think that it was a fake breakout first, and then to clear out the mess, to clear out early or weak hands, it did that kind of price action, and then went up and closed up as a green candle, which also happened to get a follow up. At this point, it's a supremely strong setup to go long and whatnot, because if you see, this is how the mentality of pretty much every trader is operating out there. They are thinking the same way. And surprisingly, it was a good breakout at that point. It seemed like it is a good breakout at that point, but what happened next might surprise you. So again, they got this small retracement, and again a big green candle, a Marubozu candle, that negates this particular retracement. So at this point, again, people will feel that okay, this might be the very point where we need to go long, because it can shoot up from this point. Well, let's see what happens next. Just keep watching. The markets continued to fall until the day end. Can you believe it? Can you believe this price action? Can you believe this setup? Can you believe this thing? It is unbelievable, right? You cannot believe such things. You feel as if these things are not real. But until someone explains you the core meaning of what is happening on charts, you won't understand. That is the reason I'm making this video, because I want people to understand that they are getting fooled. I want people to understand that they are getting trapped every single day. I don't want that to happen. Like, I cannot stop what's going on in the markets. I cannot save you from the FIIs or DIIs every single time, but at least I can tell you what you need to do. At least I can tell you what's wrong with the markets and how you can counter it, right? This video is not for one-time use. You won't understand this video if you are just watching it one time. You need to rewatch this video 2 or 3 times to get a complete grip of what I'm trying to say in this video. It's impossible for you to understand it in a one go. If you do somehow understand, it's very good, congratulations. But according to me, everyone who has watched this video until this point is a serious learner. And if you are that serious really, then go and watch this video again, because it will help you a lot in understanding the dynamics of the market. I wasn't kidding when I said in the intro, this video will bring a paradigm shift in your understanding about markets. I was not kidding. There is so much to the markets and we know so little. Even I know so little about markets, but I can just share the knowledge I have. That is the reason I make these videos. So subscribe to the channel. Yes, and let's now move to the fourth and last example, and then we will end this video. Now again, for the last time, this is 5 minutes chart of Bank Nifty futures 7th of July 2022. And what happened since morning? Nothing. Just basic consolidation around Vwap. No price action for real, no bears, no bulls, nothing. It seems as if the bulls suddenly got interested at the current market price. Now you need to think as FII or DII. Will you buy Bank Nifty randomly by punching market orders at whatever the price that is going on? If you are a DII or FII? I guess no, I won't. If I was a DII or FII, I wouldn't do that, because it wouldn't provide me with the liquidity that I wanted, right? I wouldn't do that, and so wouldn't you. What happens next? Let's see. Let's keep on watching this chart. Bang, there you go. So what happened before was just a trap set for the retail people, retail traders. This was a clear case of manipulation. In fact, all the examples that I have showed you in this video were a clear case of manipulation anyway. But this is how a trap is set. They take the markets up, they make people go long, and then they reverse the position. They just completely reverse the direction of the market. And if you see, I'll just go back a little bit. At this point, it is a perfect VWAP breakdown. Why do you think people will not short the markets? Right? It makes sense, right? Now, after looking at all these things, looking at how the trap had been set, looking at how the markets went up first and then came down later again, what do you think people are going to do? First, they took the loss in the long side because they went long and their stop loss got hit. If they had a stop loss in place, that is, if they did not had a stop loss, they are just panicking at this point and punching random exit orders at this point. But they got stopped out in their first trade at long, and now they are shorting the markets. Now it might seem a good trade at this point, isn't it? It might seem like you are finally with the FII or DII at this point. But the FIIs and DIIs are smart and they know it all. Let me tell you, they know it all. If you are shorting at this point, they are buying at that exact point. Let's just keep watching what happens next. This particular chart goes and takes a freaking day high after that moment. Tell me this was not manipulation. It is a clear cut of manipulation. This is how the traps are set for people like you and me. Retail traders get stuck into these traps, get trapped into these traps every single day. Every single day, we are just losing all our money in such traps, in such manipulations in stock markets. Yes, stock markets are rigged, but I firmly believe that if you understand the movements, if you understand what's going on in there, you can actually read the movements of the markets and make money by staying with the FIIs. I teach how to do that in my advanced breakthrough course. This course is specifically designed for those people who have been struggling into markets since 2, 3, 4 years or so and are not able to break through the threshold of consistency. This course is executed in monthly batches. That is, once you enroll for this course, you will be learning along with me for 1 whole month. You can check more details if interested on my website. I'll put its link down in the description. If you have watched this video until this long, please make sure to support me by smashing the like button, because I'm pretty sure not many people are going to watch this long video until this end. I hope you enjoyed this video. I hope you learned something out of it. And if you did, then make sure to smash the like button and subscribe to the channel, because I keep coming back with such videos that revolve around trading, trading psychology, trading success, trading consistency. Everything that you need to know about trading, you will find on this channel. So make sure to subscribe. I will see you in the next one. Until then, you guys take care. Bye bye. Peace out.